If you had to explain to a 5-year-old what you do,
Index trading, even if markets are falling down, we are able to capitalize a move on the downside and make money as the markets fall. If you're going to treat it like a casino, it will respond like a casino. If you're going to treat it like a business, it will respond like a business. For me, the budget reading happens after the budget and not during the live budget, simply because I cannot convert or translate that information to a trade.
how can you be smiling even when markets fall?
When that whole 2008 crash actually happened was when the time when I actually made money.
What kind of a person should never do index trading?
This is definitely not the place for it.
You're managing thousands of crores of somebody else's wealth. When you see them with their fluctuating emotions, how did you manage that?
So I may not give you 40% in year one, but I'm not in that bandwagon which will give you minus 18% in year two. You will only be able to judge me with time.
Tell us about a time where you saw a huge loss.
I use a concept called a stop loss. I rather have an infected finger than have an infected arm.
Is it more to do with logic or with psychology?
My reliance to psychology is completely zero.
Tell me about a situation where it was really, really bad and you learned how to accept it.
Actions, what we do physically, what we speak, that's in our hands. Results is not in our hands.
Manish, if I had to remove trading from your life, who would you say you are? Thank you so much, first of all, Manish, on being on Aleena Dissects show today.
It's my privilege and my honor. I'm so
Oh
happy
my
to be
God.
with you.
No, it's mine because I'm very fascinated by everything that you do and also this industry, right? So I would begin with simplifying it for our audiences. And so for that, my first question has to be, if you had to explain to a 5-year-old what you do, please tell us that.
So what I do, Aleena, is something called index trading. Our country has got two stock exchanges. One is the National Stock Exchange, one is the Bombay Stock Exchange. Both of them have got two separate indexes. Ours is, the NSE is called the Nifty and the Bombay Stock Exchange is called the Sensex.
Yes.
These in independent criteria can also be traded. So what happens in index trading is that you are not trading the individual components of the index. So you're not trading a Reliance, you're not trading a Maruti, you're not trading a Tata Steel, which are the individual components of that index. You're just trading the index in some totality because all the pluses and minuses of all these companies reflect in that index move. So the difference really is that we only understand trading a market or investing in a market on the upside, where you buy something at 100 rupees, 101 is a profit, 99 is a loss. So you will only be aspirational for this market to go up. Unlike that, in index trading, even if markets are falling down, we are able to capitalize a move on the downside and make money as the markets fall. So you need to take a decision right in the beginning when you're making that trade, that am I trading on the upside of the market, which in our parlance is called, are you bullish on the market, or are you bearish on the market because you feel the markets are going to fall down? So the way, if the market starts going up, but you thought the markets are going to go down, then you start losing on that trade because you are contrarian to what's happening in the market. But if you thought the markets are going to go down and the markets go down, you end up making money because now the markets are moving in the direction in which you thought the markets will move.
Got it.
So that whole science is called index trading.
Okay. So again, if I had to say it in my language, it would be that one is when you invest in your mutual funds or SIPs, where you are investing in individual stock or a company. Over here, it is index trading is that here's top 50 companies and you invest in them together, which is why it's called that you are investing in the entire market together. Because
Exactly. So when
50.
you invest in a mutual fund or in SIPs, you necessarily may or may not know where is that money getting invested.
Okay.
But it is getting invested in stocks.
Yes.
So it could be a large cap mutual fund, it could be a mid cap mutual fund, it could be flexi, it could be various. There are many mutual funds who are doing all kinds of things in the equity market. Your profitability or your building of wealth or your returns, again, through that journey is only when the markets go up, not when the markets fall.
Okay. When you say the market going up and market going down, for so many companies together, how does the market move?
No,
Like,
so we have weightages. So let's say today Reliance, Infosys, and TCS might be higher in weightage,
yes.
while there could be Wipro and some other stocks which are lower in weightage. The individual movements of each of them happen on a daily basis.
Yes.
Not necessarily all are going down and all are going up.
Correct.
So presumably Reliance is up 50 rupees today, but Wipro is down 5 rupees, and Hindustan Unilever is up 10 rupees, and Tata Steel has not done anything much. It's 50 paisa plus minus.
Okay.
Each of them have a particular weightage, which is calculated by the exchange on certain parameters. When all their pluses and minuses are converted into a point format, maybe Reliance is up 50 rupees is designating 35 points or 40 points to the index, and Wipro's 100 rupee fall is reducing it only by 5 points. It's not that because this is 100 down, the points should be more, because Wipro would have a lower weightage in that scheme of things.
Okay.
The sum total
Average.
of all those 50 stocks, which is why it's called the Nifty 50 index, because it's the 50 blue chips which are part of that index. The sum total of all those points together makes the Nifty index either positive or negative with a certain amount of points. So when you say Nifty was down 12 points today on closing, the sum total of all of those resulted in a negative 12 points for the index.
Okay. Tell me that when you say investing, trading in this market, is it more to do with logic or with psychology?
Two completely different schools of thought. In fact, the term investing and trading by itself are very different. I would like to, in your words, dissect them. When you invest, your goalpost or your target is not today, tomorrow, day after. You're investing short term, medium term, long term. Every investor has a different definition of these terms. Coming from my experience of being in this market for the last 21 years, short term, medium term, long term has changed to my years in the last 10 years. 10 years back, when you spoke about I'm investing for the medium term, that meant you're invested at least for the next 2-3 years. Today, medium term is 3 months. It could be 6 months. Short term could be anything between tomorrow to the next 10 days. But the thought process of investments is, like I mentioned, that you buy for a rise. The downfall of a market or the fall of the market will not come under the criteria of investing. That comes under the criteria of trading. Because in trading, you're allowed to trade the upside or trade the downside. So that really is the difference between investing and trading. When you speak about psychology and logic, psychology is something that I have never been able to put, and it might be right that I've chosen not to put, because I am using a field called technical analysis. My science is technical analysis, which is more about charts and numbers and statistics and theorems and indicators and a lot of things which are in front of me. It's 100% mathematical, 100% statistical, and I'm using those inferences to come up with a solution or a decision of whether I have to buy or sell. So for me, I have always used that particular style of trading this market. There could be many people could be using all kinds of things. A lot of people have done very well with psychology, because there's an element called market sentiment.
Yes.
And a lot of people who have their own tools to gauge that use market sentiments, convert it with the thought processes of psychology, and then come up with an answer that are we bullish on this market or bearish. So the beauty of our markets is that there's place for everybody. Everyone comes with their own nuances. Everyone comes with their own idiosyncrasies. No two people are the same. I could be showing you my chart, and let's say you understood technical analysis, and you and me could differ in our opinions of what we see on the chart also.
Okay.
Technical analysis is where we project and we forecast basis the data that we already have available. Having said that, to clarify, if you have an IPO, I can't be of any help to you. Because let's say the IPO listed last week. So technically it means I have only 5 days of data barring Saturday, Sunday. So now I have only 5 days of price data. 5 days of price data for me will not be sufficient to project what will happen to the price of this share going forward.
Hmm.
But when we use technical analysis and we use a lot of data, a lot of historical data, we try to study their movements. We try to see that where are they really moving in together, where are the supports, where is their buying situations, where are they selling situations. If they're going up, are we facing any resistance on the top that the markets are not allowing it to go up? These are all mathematical and statistical tools that we use. Basis certain theories, basis certain understanding, I'm using a gamut of almost 29 different kinds of studies. Am I waiting for all 29 to say buy or sell? The answer is no. They're each important for different parts of the market. Like you could have a rising market and suddenly you dropped a little bit, but that did not change the course that it can again start moving up. I might have an indicator which tells me that, okay, this slight drop is not breaking the stock completely down. In fact, this is a time that you should look at buying this stock because chances or the odds are it will turn and again go back up. So there might be 3 or 4 out of those 29 studies that help me do that. There could be a situation where you've continuously fallen, like how we have fallen in the last 10 days. And I'm actually looking that when is this market going to turn? So there might be few studies which start giving you hints that maybe the fall is over. Maybe the fall is not as severe today as it was yesterday, which for us is a positive sign, which means if there was a lot of selling today, and there's less selling tomorrow, tomorrow is better than today, at least as far as the sell is concerned.
Okay.
So chances are that we might take a U-shape reversal and we start moving upwards. So I need certain statistical tools to help me with that. When we put all these different studies together and a semblance is made, a thought process is made, there are many other psychological matrices that I have in my head which are not textbook style. They're more experiential, where I've seen things happen, again with numbers and statistics and not with my own judgment of emotion, that this is the way this whole thing should be constructed. If this happens, what will my risk be? Which is the first question I ask myself for any trade. It's a very cliched term we use called stop loss. People just say, oh, I can only take 100 rupee stop loss. I can only take a 2% stop loss on my capital, which is actually not the right way of calculation. The right way of calculation is a mathematical indicator. It's a statistical tool which allows you to assess what is the risk on this trade. And every time you take a trade, that tool will change. It is dynamic. So just because today it was 2 rupees on a 100 rupee trade doesn't mean it will be 2 rupees tomorrow. The same 100 rupee trade might have a 12 rupee risk tomorrow, and it might have a 20 rupee risk day after, and only a 50 paisa risk the next week. Because these are all governed by the volatility of the market. So when I answer that question of risk, only then do I project that if this is my risk, what should my reward be? Am I getting the reward? I do not know. I'm only projecting that if I'm willing to take a 1 rupee risk, my own model, the way I've devised it, is that for every 1 rupee that I want to risk, I want at least 1 rupee 50 paisa on the gain side, which is what we call a 1:1.5 risk is to reward ratio. So 1 for 1, I'm not interested in doing that. Okay. Because then if I'm 5 out of 10 correct, being very conservative, that means 5 times I made a rupee and 5 times I lost a rupee. It's a zero-sum game for me. But even if I'm 5 out of 10 and my 1:1.5 works, it means 5 times I lost a rupee each. But 5 times I made 1 rupee 50 paisa each. So the net of 10 trades will still be positive in my favor. Once we have constructed all of that, and whatever's construction is not a building construction, it's all happening in the mind. In a real market, when you're looking at dynamic chart movement, prices are moving all over the place, you're coming to this kind of a structure. When all of that is done, you are projecting that I feel, or I'm of the opinion, or chartically speaking, like I would like to be more formal about it, I feel this is what could happen to this stock, or this is what should happen with this index, given these particular indicators and assumptions. So coming back to your question that what about being wrong, none of us are claiming a 100% strike rate. What I would like to believe is that we should be able to deliver a positive balance sheet. Now, whether that took me 99 trades to achieve or 9 trades to achieve, whether 2 trades were bad or 25 trades were bad, uh, the whole concept of making positive returns will only matter to me at that point in time. The journey is fine because that's all part of the journey. The end goal will always be a positive balance sheet.
Got it. Just tracing back a little bit, what are the factors that affect these market movements?
In our markets, Aleena, there are too many factors that affect it because we are one of the most sought after markets in the world today. We are arguably the second or the third most sophisticated exchange of the world. Our derivative volumes, like I told you about the Nifty and stocks, which has futures, options, all of that, derivative volumes are arguably the highest in the world today. We have a lot of interest both from domestic institutions, foreign institutions. We are the sought after index today. We are the sought after markets today. So in such a situation, there could be anything and everything that affects the market.
Okay.
It could be your industrial production data. It could be geopolitical risk. It could be a currency problem. It could be poor corporate results. It could be good corporate results. It could be political drama that might be happening in the country. It could be elections. We have the ongoing budget, which is going to come in the next few days. It could be anything. But all of this does not come under the realms of technical analysis, which is what I do.
Okay.
Simply because we are of the opinion that all of this action is already encapsulated in price.
Okay.
So to explain it further, let's say you are an institution who feels that I'm not too happy with the current scenario and I expect this market to fall. So you will implement that thought by taking some trades in the market on the downside. So what is that? That's essentially volume. And to back that volume, you're putting money. So if it's a 100 rupee trade, you're pushing 100 rupees in the market that I want to take this trade worth 100 rupees. This is my 100 rupees for that trade. Now I would like to trade on the downside. You're taking contracts on the downside because that's your belief that this market will fall. I am another institution sitting somewhere in the world thinking that India is a great story and whatever is going to happen in the next few months is going to be very good for India, which is going to result in this market to go up. Now, I would like to place 100 rupees on this market on the upside. Like you and me, there would be somebody with 50 rupees, there would be somebody with 5 rupees, there would be a household with 2 rupees, and there might be an ultra HNI with 2000 rupees. Each of us are bringing our thought processes to this market. All of us are doing what we feel is aligned with the market and aligned with our thoughts. Like I said, what will happen, none of us know. We are just putting in our trades with that thought process. So your contracts on the downside, my contracts are on the upside, somebody else is doing something else. The sum total of all of this is volume. Because you might have bought 100 shares, I might have bought 50 shares, somebody would have sold 2000 shares. The pluses and minuses of all of that is volume. That volume is reflected on a chart. Because that chartical data comes from the stock exchange directly. So there's no hide and seek about it. There's no secret volume that is happening behind the scenes before the market opens or after the market closes. Whatever happens, happens within the realm of that market. And that is live that you're seeing in front of you in the chart. Are you being told who bought and who sold? Definitely no. Are you being told how much was bought and how much was sold? No. But you're definitely getting volume. That volume data in the background is churning all the buys and sells due to technology, which was not there before and is there today. When that is all getting implemented, is getting converted to numbers and statistics, which is then reflecting on our charts via various studies. Now comes the golden touch of how you interpret that.
Okay.
Am I interpreting this whole thought process that this market is going to break? Or is it that this market is going to go up? I might even come to a conclusion that this market is in no man's land. We call it sideways movements in the market, where we say this market is just moving in a range. It is not breaking out. It is not breaking down. So we are waiting till our chartical patterns come in such a way that either we get a buy which pushes the market up or a sell which pushes the market down.
Very interesting. I want to now understand, how did you get into this?
I'll try and keep it as short as possible. My affinity to the market started when I was 9 years old. Would have been 92 when we had the first major crash. Our parents, I mean, all of our parents have all been investors at some point in time. We all hail from middle class families who have those paper trades, those paper shares which used to be exchanged in those days. If you bought something, you got physical custody only 7 to 10 days later via physical share, where the seller signed his name and gave you the share. Today, things have changed. Everything is demat and everything is digital. In those days, I used to see the markets, I used to track the markets. The internal calling was more to do with numbers.
Okay.
Could I understand the markets? The answer is no. It would be wrong on my part to say I understood the markets. I think very few people say they understand. I am of the opinion I still don't understand the markets today. So during that phase, when markets used to go up and down, and parents are coming back home from work, you kind of see that their moods are very good if markets have gone up. You see that they're all forlorn when the markets are down. And it was just a simple question that what happened today in the markets, because we used to hear these things in our neighborhood and people talking, अरे आज तो बाजार क्रैश हो गया, oh आज तो बहुत मुनाफा हुआ. So it was more like what happened in the markets, like what do you mean munafa, what do you mean crash? And they used to be like, oh, I bought so and so share today, it's up, and I sold it and I took out a profit. And we used to celebrate those things, because then those small profits we used to use to go for holidays, and we used to go for dinners, and we used to do all kinds of things. And our parents were happy because we were not tapping family savings for that. We were not tapping ongoing business for that. This was all added income that used to come. When market crashes used to happen, and I saw two very big ones, one in 92 and one in that whole 98 to 2000 time, I started seeing newspaper articles of people who had committed suicide, people who couldn't pay credit card bills, people who lost their homes. And every time it used to be because of the share market, because of the share market. And it kind of became synonymous in those days that people said stock market trading is like gambling.
Yes.
And a lot of people still say that today. And I've always maintained that I don't think it's a gamble. It's about how you treat it. If you're going to treat it like a casino, it will respond like a casino.
Okay.
If you're going to treat it like a business, it will respond like a business. Today, when you go to a casino, you always have this in mind that, what, doesn't matter how much money I have, my budget for the casino is 5,000 rupees. And the minute you lose out on that 5,000, you just walk out. If you're going to say, I'm going to withdraw another 5,000 and again go back into the casino, you are now trying to get the better of the casino. And like they say, at the end of the day, the house always wins. And then you come back, and then at night you're brooding that, oh, but now I'm 5,000 short. If it was only that 5,000, it was affordable. Now I've kind of overdone it. This happens in the market too. And that's why I feel people don't resonate with money in the markets the way I would like them to. The thought process at that time was that, isn't there any way that people can be smiling even when markets fall?
How can you be smiling even when markets
fall? Exactly. And I did not have an answer to that. India did not have an answer to that, because at that time derivatives was not available in India. Index trading and all these instruments were not available in India. So it was more like an internal calling. And I have had a calling with numbers since I was a kid. Why, what, I don't know, but there's always been an inkling to numbers. So when I went to Australia to study, I did my graduation over there. I pursued a bachelor in international business, where one of my majors was statistical analysis and forecasting management.
Okay.
And that was optional, but I wanted to take that as a major, carrying forward that whole thought process. What I was sure about is I am registering and enrolling for this course only in the endeavor and aspiration that I'll be able to answer that question, that can people make money when markets fall? What is the relation? Because in statistical analysis, you have past data and you're able to project future data. So which is what I do today. We have past data of the markets and we are projecting future data. Of course, today the things that I'm doing are far more complex than I was doing in university. but at least there was a seed.
Hmm.
I could have gone wrong, and maybe that course would not have answered that question. I would have to be fair that it did answer 10-15% of my questions then, where at least I learned certain techniques of projection and of analyzing data. That went hand in hand with international finance as a course, where futures and options and all of these things were discussed. I was completely zoned out over there because none of all that had happened in India. But Australia is a developed country. They already had these instruments back then. So it took me a lot of time to understand. I used to repeatedly go to my professor to understand those mathematical terms and those statistical calculations. But by the time I finished all of that and came, I was almost certain that I need to embellish my skill sets a little more, and it has to be more precise. What was taught in university was more connected to simple data and analytical tools. Like I had did a paper in one of my statistical exams, which was on projecting cancer data. And it was, you might be familiar, in school we used to do correlation and regression with the X and the Y. And in that there was data given for Australian cancer rates for the lip, esophagus and stomach cancer rates.
Okay.
And they wanted to see that is there a direct correlation between these three with cigarette consumption.
Must be.
So see, that's an assumption.
Yes.
So the immediate assumption is that, okay, because a cigarette touches here, lip cancer should definitely be directly connected to cigarette consumption.
Is it?
And when we finally analyzed the data, my professor had given me 10 years of data, which was monthly data. And by putting all the correlations together, I realized that lip and esophagus was less in nature in terms of correlation, close to no correlation, while stomach had the highest correlation. Which when we think about it, we're like, really?
Doesn't make sense, yeah.
But then those numbers proved that. And then what they did is they kept my paper in the university and they started waiting for more data to come.
Okay.
And as more data started coming, they realized that the stomach cancer rate kept increasing in that sheet of paper with real-time data, proving that my statistical analysis was correct.
Okay.
The tools that I used was correct to project that. That did give a boost of confidence, but I did not let it get into my head because the end goal was still not a professor saying, well done, this is what's happened. The idea was, can I take this back home and use it on markets? Which was not sufficient.
What data did you use to be able to tell about this cancer?
So there is a particular study called the Granger causality test.
Okay.
Where how in school we did X and Y, they are called two variables, X and Y. In this, there were almost 7 to 8 variables, and you had to see the correlation with each variable with each of the other variables as like multiple permutation combination.
And that's how you came up with the result.
Yeah, then I used certain calculations of statistics, and that is how I used to project it, which is a Granger causality technique of how you're able to project that to see what is the correlation between two variables.
Got it.
So that again gave me some help here, because today when I'm using these 26 or 30 different studies, here too I'm using a lot of correlations to see whether there is a relation or there is no relation. Because ideally there are only two singular points of content. One is the price and one is the volume. If the price is falling, is it falling on lesser volume or is it falling on a lot of volume?
Okay.
If it is falling on lesser volume, it means the market is not that bearish that it should fall. Because if it was like that, people would be selling left, right, and center, which means there would be very high volume. So we find that to be a dichotomy where we are saying that you're falling, but you're falling on less volume.
Got it.
So that is the smallest and the most and the simplest part of a correlation. That kind of correlation I'm doing with almost 25 different studies.
Okay. And now you do the same thing for all the market analysis that you do.
Yeah. So in my case, I only specialize on one asset class, which is index trading. Within the index trading also, I don't do the bank nifty, which is another sought after index. I don't do options.
Okay.
I do only the nifty futures, which is the nifty index, and only trading the nifty index. And that is the only one thing I've been doing on the upside and the downside of the market for the last 21 years.
when you started doing this back then, when was the first time you saw that, oh, it's getting good results and this is what I'm good at?
Specifically, it would be 2008.
Okay.
If you do some research into 2008, it was when the whole credit crisis of the US had happened, which followed by the Lehman crisis, the Lehman Brothers fall. Markets had tanked at that time. Until then, we were in this gung-ho bull rally where anyone and every time you met somebody, the first thought used to be, whenever markets fall, just blindly buy. And buy anything you want, this market will go up. And it did. And while that was great for people's bank accounts, I felt the downside of that was people became very complacent because they hadn't tasted a bear market, they hadn't tasted a fall. I, for one, shouldn't be speaking about what others tasted simply because I was too young myself and I was still getting into this full time. I got into this full time as an occupation in 2007. So 19 years and counting today while we speak. But that is more from a perspective of this being business. The 5 or 10 years before that was only practicing and understanding and embellishing my skill sets. But 2007 onwards, it was physical money with real life following the markets from open to close and actually putting in physical trades to see whether I'm making money or losing money. Unlike other occupations, in this, if you're wrong, you lose money.
Yes.
And it's actually a loss. And it's not a loss that you can say, okay, you know what, I'll do better next time, please give me my money. You've already given your money and the money's gone.
Right.
So in such a situation, thankfully, God Almighty's blessings, what was important is I followed my skill sets and I followed my rules and I followed whatever I was seeing on the chart. And when the turn happened around that 2007, 2008 time, and it started indicating that this market is no longer moving up and we have early signs this market can break down, that's the time I traded on the downside of the market
In
for the first
2008.
time. Yeah.
Was it linked to because the US markets were
I had
crashing
no
at
idea
that
about
time?
that. I had no idea
It
about
was
that because
happening though, right?
yeah, it was happening. It was happening, but like I told you, I don't follow news or I don't follow fundamental analysis for what I do.
Okay.
And those were not the days of WhatsApp, and we did not have so much of technology. We used to still use those old Nokia phones back then. And information was not so readily available. I'm thankful it was not readily available simply because sometimes we delve so much into that noise that we start forgetting our skill sets, which happens. And going back to that 2008 time was when I saw that those things were happening. Did I know why it's happening? The answer is no.
Okay.
I just said that this is a chart. These are my studies. This is what I have been following for the last 4-5 years. This is now telling me that I should be selling this market. I should be going short on this market because this market should fall. But that should fall again is a projection.
Yes.
It is not a prediction. It is not that I'm saying it will happen or it has to happen. I've always believed markets are a humbling force. The market knows more than me. I am not supreme. The market is supreme. The market is saying that this should happen. Or the markets are forecasting this should happen. And I went short at that time. When that whole 2008 crash actually happened, was when the time when I actually made money. And that was a time when everybody around was brooding. Whenever we used to meet and they used to say, and how are markets looking, it used to be with a very sorrowful face, with a thought of feeling like you've lost out. You did not encash on time. You did not take out profits in time. You saw something which was say 70-80% positive. Today you're seeing them at minus 20%. That was notional. This is notional. You were not able to take that profit at that point in time. And in my case, I was in a state of equanimity. And they were like, you are also in the market. So what happened? What did you do? How bad is your loss? And I used to feel very bad telling them that I'm really sorry, but then I'm not negotiating losses over here. I've made money. Because more often than not, either they wouldn't believe you.
Yes.
And if they believed you, they felt you're showing off over there. So I used to just be quiet and I used to be like, yeah, it's been okay.
Okay.
And they should be like, no. What do you mean okay? How much did you lose? And then when I felt I'm being pushed to the wall, I was like, I made money. And they were like, how did you make money? How can you make money? Everything has fallen down. So I said, yeah, exactly. Because everything is falling down, I went short on the Nifty. and the Nifty is fallen and I've made money. And I had no other better way of expressing it in this way. So I remember for the longest time, at least for the first 3 to 4 months, I didn't go to social gatherings simply because one, that I felt that now that I've kind of seen, or what we would like to say, tasted blood in the positive way and not the negative way, maybe I should be spending more time trying to gauge and trying to spend time with my charts.
Okay.
The thought process has always been that I have a one-to-one relationship with my chart. My chart speaks to me in some language. It's a language of silence. It speaks to me for some strange reason. I understand, and if I'm communicating it, the chart understands. So if you came to my office, my entire trading room is probably the size of your studio.
Okay.
I sit all alone. I sit all alone. I don't have a television set in the office. No newspaper subscription, no WhatsApp group alerts. My phone is on a stand, but it's on silent mode because I don't want any sound, whether a beep or a ringtone or anything like that. And I just have 2 screens in front of me, which are only my charts. Each screen is subdivided into 4 smaller charts, which are all different variations of the Nifty, with different studies and different templates and different indicators all over there. And it's like a piece of art to me.
Wow.
And people say, how can you like just keep seeing all this the whole
Yes,
day?
I couldn't.
And for me, that actually depicts like a painting. Sometimes I actually feel like taking a printout and framing it and sticking it on the wall. But that's just my one-to-one relationship with the chart. But that whole time between 9:15 and 3:30, while live markets are on, there is no sense of noise. There is nothing at all that's happening. Even when I speak on television, now thankfully all studios have converted to Zoom. It's only 5 minutes before my show that I actually log on for my interview.
Okay.
And the minute they say thank you for coming on the show, I log off immediately.
And go.
Sometimes I don't even know who are the anchors on my show. So when they do the audio check 1, 2, 3, I actually ask that person who are the anchors today. Simply because I've got no idea what's happening on the show. For me, the budget reading happens after the budget and not during the live budget. Simply because I cannot convert or translate that information to a trade. And whatever is being spoken, anyways, you will have a plethora of data available on the phone thereafter. There will be summaries, there will be PDFs, all those things will be there. So if I caught up on that after 5 o'clock in the evening, I'm not receiving a medal to know whether I knew that at 9 o'clock or I knew that at 5 o'clock. So the whole idea and the concept of having that one-to-one relationship, being completely focused and constantly trying to better yourself at what you do.
Okay, so here's we've spoken about the upside and the first time you saw like a win. Okay, now tell us about a time where you saw a huge loss.
So I wouldn't really term it as huge loss. Are there losses? 101% there are losses. Most definitely there are losses. Like I mentioned to you, the end goal is a positive balance sheet. However, it's about how do you address a loss. You come from a business family. Have you never seen losses in the house?
I have, multiple times.
We've all seen. It can be the biggest and the richest person of the country to anybody who is running a kirana store. Everyone has seen profits. Everyone has seen losses. The idea is how do you address them? How do you approach them? And how do you live with them? First things first, like I mentioned before, I live a life of equanimity. For me, both are the same. You have wins, you have losses. It's all part and parcel of this journey which we call life. Second, because you're answerable to yourself and others, because this is real money, you can't stand up and say this is life, so what if we lost money? You can't do that. That's when I come to the next part when I talk about approach. How do you approach it? Like I mentioned, I use a concept called a stop loss. So for me, there is no open-ended loss. Okay. So if I've bought something at 100 rupees and I've calculated that my stop loss is 70 rupees, that means whatever happens, if 100 becomes 70, I will close out on that trade
and if that's
and
70,
book that loss of 30 rupees. I will.
If that 70 goes to 200, if it ever increases later,
there is no FOMO.
No regret.
There is no concept of FOMO.
Because that also happens, right?
It can. But then our science believes that if you've fallen from 100 to 70, and from 70 if you have to go to, let's say, a figure like 200, like you said, in that process you will get a buy.
Okay.
And you will buy.
Okay.
But for me it is not like, but the last time I did this I lost, so why should I trust it again and buy it now? That is when your ego comes into play. That is when arrogance comes into play. That is when that whole thought process that I cannot be wrong comes into play. Because when you will give that example importance, the next time 100 becomes 70, you will not cut the trade. And you will not take your loss. In anticipation that last time when I did it, the 70 went up again.
Okay.
Why should I do it now? And when that 70 became 50, you realize that you did not follow your rules at 70. So what was supposed to be a 30 rupee loss has now become a 50 rupee loss. So I've always advocated that I rather have an infected finger than have an infected arm. Because at least with 4 fingers I can still function. But without an arm I can't.
Right.
So it's all about coming back into the market, simply saying that this is that 1 to 10 of my 10 trades that I've done. This is that one trade which did not work out. I usually avoid calling them bad trades, because the minute you say good trades and bad trades is more a negative connotation. I always say trades that worked and trades that did not work out. So this is a trade that did not work out. It's part and parcel of the system. I'm again back to zero. I'm again ready to take the next time a trade offer is offered to me on the chart. Whether it's on the upside or the downside, I'm level 0. And when it gives me a trade, I will take the trade. If I'm following my systems correctly, if I'm following my risk mechanism of 1 rupee loss versus 1 rupee 50 paisa reward correctly, sooner than later, that loss will just be one of the trades that did not work out. And soon later, you will make up and be in the green. So like I mentioned to you, the approach has to be cold. You can be warm as a person, you can be emotional as a person, but this is definitely not the place for emotional people.
Okay.
Simply because it is them who are going to get hurt at the end. And like I told you, the price you pay for this is very expensive. It can be unaffordable.
Yes.
So you leave all of that outside when you're coming into the markets and only follow a system and follow rules. That's why right in the beginning of this interview, I told you my reliance to psychology is completely zero. Simply because those are thoughts, and thoughts are but thoughts. So you definitely need some logic or something to base your decision on.
Right.
In this particular case, this is my matrix that I use.
So basically, you would know how much predictably you can lose. That's how
that
you
is
do it.
Always the first set of my matrix.
And that is, I think a lot of what you're saying is based on like a discipline, which is what
101%.
people don't get, especially in the market. You'll be tempted to like do things and then you regret it, or you be like, oh, you've done it wrong. And then even if you do it wrong, that's fine. But then your ability to deal with it becomes very difficult. So when you're saying that you have this discipline over the markets, I want to understand where it's come from. Has it come from childhood? Has it come from your parents, your teachings, learnings? Where?
I think it's a mixed bag.
Okay.
I would not like to praise myself by saying it's innate qualities because there's always some foundation to something. But as a person, I'm made to understand by my parents and others who were there when I was young that I've always wanted to be and I've always aspired to be disciplined.
Okay.
For me, discipline is not discipline in one walk of life. Either you're disciplined or you're not. And that flows with everything.
Yes.
So it could be discipline with your work. It could be punctuality with your time.
Yes.
And that punctuality again doesn't have to be different for a film and different for a flight.
Yes.
So I have people and friends who kind of get upset with me for all these things, but I need to reach and watch a film when the lights are still on. And they'll be like, you're not going to go and clean inside. They're cleaning, let them clean. So I'll be like, it's okay, let them clean. I'm waiting outside, but I am where I'm supposed to be at this point in time.
Okay.
Because I just feel that many a times when you're racing, we are any which ways racing. We are always getting ahead of ourselves. We are always like reaching nick of time. The common excuse is, oh, Bombay traffic and this traffic and that traffic. Well, if you know there's traffic, just leave half an hour earlier.
I'm also saying this because, so many of our younger generation and people that I meet also have so much talent and are so good at what they do, but they lack the discipline, whether it is discipline to eat right, whether it is to sleep, whether it is to stop using the phone. These are things that nobody then teaches us. How do you, like, okay, you can be disciplined, wake up at a certain time, but how do you do it? Nobody teaches you, which is why I'm like, where does it come from? So that other people can
So
take
it's
it
a
too.
fair point, and so I'll answer the question of where does it come from, and then answer this question on technology. Since you spoke about the phone, my mother is a very disciplined person,
Okay.
very punctual,
Hmm.
very punctual.
Hmm.
My father is very particular about work,
Okay.
so I wouldn't say cent% discipline, but borders on the line of discipline in a different walk of life.
Hmm.
Um, my mentor, who was my teacher who taught me technical analysis, he has always been very particular about discipline. I definitely give it to him for all the training and for all the teaching for which I am what I am today in the work that I do.
Hmm.
Not in terms of what I am today, but in terms of what the work that I do.
Hmm.
And he was also very punctual
Hmm.
and very disciplined as a human being. And I remember when I had my early learnings, those days we had the old modem connections. There was nothing called a Wi-Fi. And after my training, there used to be some remote training with Reuters in the US, and there used to be some on-ground training with him in Calcutta. And he used to give me homework where I had to sit and write out all the trades for the last 2 years that happened in the market with that particular technique.
Okay.
So let's say this gamut of 25 studies on one particular day, we worked on two techniques or three techniques, and it was like, I want you to work out on each of these techniques and go back, say, 2 years into Infosys data
Hmm.
or 2 years into Reliance Industries data.
Hmm.
Doesn't matter whether you're doing Nifty or you're doing ONGC or you're doing Reliance.
Hmm.
The technique is the same.
Hmm.
You're using the same studies. It doesn't matter what's written on top. It could be a USD Indian rupee chart.
Hmm.
It could be the Argentinian stock exchange chart. It doesn't matter. The techniques are the same.
Hmm.
And he used to be like, I want you to write date wise that if you took this trade, why did you take this trade? Was the risk managed well?
Okay.
If it got stopped out and you lost money, how much did you lose? If you made money, how much did you make?
Hmm.
And I want a summary sheet that in the last 2 years, how has this stock performed on a particular indicator? Let's call it indicator A or study A.
Okay.
And do the same thing for study A and study B and study C, because those are the three things we've learned today. So I used to ask him, when do you want it? He said, the next class will happen only when you finish doing this. And he, probably from his historical past or other students who he had, would be like, we'll probably meet a week later or 10 days later till you sit down and do all of that.
Hmm.
And here I used to call him up 3 days later saying, okay, I've put all that data together. When can we meet? He said, but when did you do all this? I said, I've sat up 3 nights. So I used to take a nap after dinner, like from 10 o'clock to 12:31. And I used to wake up at 1. And from 1 o'clock to 8 o'clock, I used to sit and do all of that.
Wow.
And then markets used to open. And then even though I was tired, I used to still sit in live markets. But that was kind of trying to jump the gun by saying, okay, if I read and learned these three techniques yesterday, I want to see whether these techniques are working in the open market or not, because then it's a live market. What I dealt with at night was historical data, which was updated as at yesterday. Today is a new day. Today's data will come when the day gets over. But when the market is live, am I seeing these things happening in the live market or not? That just kind of gave me additional conviction that, oh yeah, oh, it worked here. Oh yes, he mentioned that to me. I can see something like that has happened at 12:38 in the afternoon. So from 9 o'clock to 12:38, this didn't happen. But at 12:38, when this happened, the market either fell or went up, and it kind of resonates with what I was taught. And then again, I used to go back to him 3 days with all my exercise books and all of that. By the way, I still have all those
Books.
pages.
Okay.
It's more than 250 pages of handwritten data with pencil, and many a times I still go through them.
Okay.
Not for any other reason, because I always feel that when you go back to your roots, there's always some finer point where I might have made an asterisk and written there that 2019 April 17th something like this had happened in the market, and then I will go back in my charts and say what happened that I made an asterisk mark over there. What was so significant that I had to really write that date down? And maybe it was one of those studies which happened at that point in time. So sometimes it is just revision, it is just about doing some homework on a Saturday, Sunday, when you can just take out half an hour just to understand what's really happening. So a lot of this discipline and all of that comes from these factors. I believe patience and some of these other virtues, which necessarily doesn't have to do with the market, is also important in what I do. It's about being diligent, it's about being patient, it's about being disciplined, it's about being cautious, and most importantly, it's about being grounded. It's not letting the success of a trade get into your head, for which you feel that I am always right. I know what will happen in the market. Like Shakespeare, I think in some place said that if I spake, let no dog bark. That kind of situation does not work in this market. That's why I feel life and the markets are a lot alike in these kind of things. Like markets with profits and losses, life is about wins and losses. It's about success and failure. You need discipline there, you need discipline here. You need to be patient there, you need to be patient here. You don't need to be over the top and egoistical there. The same virtues work over here. So in a way, there is a parallel where I don't feel any more that am I in the market or am I not in the market. These are now like second nature. They're all like part and parcel of your DNA. What I wanted to get back to was when you mentioned to me about the phone.
Yes.
So it's been about 19 years since I've had a physical office and I've been doing markets from there. Until today, I don't carry my laptop home.
Okay.
So when I finish my markets at 3:30, whatever 1.5 hours I would need to spend some time, whether it's mails or it's research work for the next day. So I try to keep a cutoff more like about 6 o'clock, 5:36. So necessarily nobody is giving you a certificate that you spent 14 hours in the office. It's about what did you achieve in the hours that you were in the office. So I'm usually in the office by around 8:50, 8:55 in the morning because markets start by 9:15. So I don't get into the office at 9:13 to see that, oh, in 2 minutes the markets are going to start. And then like you're scrambling for your phone and you're doing this and you're doing all of that. I give myself like 15, 20 minutes of just sitting and doing nothing. And I'm like, already the markets are online. You're checking the internet is working, the Wi-Fi is working, all of that is there. You're sipping your black tea and you're waiting for the markets to start. So by then you're like completely level-headed. You're trying to see what's happening with the charts because now the charts are stationary. And the minute it'll be 9:15, then the charts will start moving.
Yes.
So you're just revisiting what happened yesterday in the markets. You're not predicting, you're not projecting because it's not a live market. When the live market starts, then you'll know what to do next. In the same way, when I leave my office, then the laptop stays in the office.
Okay.
And then I do not look at the laptop thereafter. There is always a spare laptop kept at home because sometimes you might not feel well, you don't go to the office, the next day you work from home or you're traveling. But that is just kept separately, that is not opened at all. My phone data is switched off by 10:30, 11. So there's no WhatsApp group alerts and no jokes and there's nothing. There's no interaction really happening at that time unless it's an SOS. The phone is kept on because if there is an emergency, somebody will call you. They will not text you. There is still time for Netflix every day. There's still time for playing squash thrice a week. There's still time to swim thrice a week.
Wow.
So in that way, I've always believed that we must respect compartments.
Okay.
So when you spoke about talents who do extremely well, but let's say don't eat right.
Yes.
Necessarily those things are not connected, but one of them is connected to your health.
Yes.
So hence I feel that every stage, every phase of life, every day must be in compartments.
Okay.
And you must respect those compartments. You and me are chatting right now. Both our phones are on silent. You have the option of chatting because I'm the one who's talking more than you are. And you can keep typing and keep asking me the questions whenever I'm done. But it's just about mutual respect that right now we are respecting each other, but at the same time we are concentrating only on this podcast.
Yes, I believe in being in the moment.
Always, because so for me it's 100 or 0.
Okay.
So if there was a skill set, let's say I would like to pick up the cajon instrument and learn it. I would like to take up Arabic or Spanish as a language to learn it. The minute I think that will I be able to give it that kind of time? And the answer is mostly yes. I would still not do it.
Okay, but
Because
then
I
you're
will
doing
not
justice.
be able to give myself, I would not be able to do justice, and I would not be happy with myself
Okay.
that I could not give it my 100%. So if I cannot give it my 100%, it is there on the bucket list. It will be looked at when I can give it my 100%.
I come up with because I'm creative, come up with so many ideas and so many business plans and so many things that could work out. And then over time, I've realized you can't really pursue everything at the same time, no matter how excited you are about it.
Absolutely. But then again, you will be able to give your time to that where you have your calling.
Yes.
So today, if you did one podcast less, you would be able to pursue that business plan, or you would be able to pursue anything else that you want to do. Somewhere in your mind, this will supersede that. And because this will supersede that, it's your own mind telling you, it's your own soul talking to you, saying that this is meant for you. This is where your calling is. You rather spend more time on this and make it your forte.
Right. Okay, now we've spoken about how you manage, how your discipline is, how you work around this. But you're also now managing people's money, right? You're managing thousands of crores of somebody else's wealth. Now, they don't essentially come with the values and mindset that you have because they are putting in money, trusting your advice. Okay. Now, when you see them with their fluctuating emotions, how did you manage that?
So at the outset, it takes time for two people to get used to each other. So if somebody is whimsical, it's a trait.
Okay.
If somebody has anxiety issues, it's a trait. I am not here to judge anybody. So just because I maintain a sense of discipline doesn't make me right, and doesn't make me correct, and doesn't let me have an upper hand on you. We are all encapsulated with different traits and characteristics. As long as we are not able to appreciate that and not respect each other for that, that's where the problem comes.
Okay.
So in my pitch to a fellow investor or a prospective investor, will definitely outline my skill sets, will definitely outline how do I approach markets, what is it that I do, how do I do it. But I will always put in that rider that look, it's a market at the end of the day. I'm not here to spook you, I'm not here to scare you so that you say, then why am I talking to you? If you have to tell me it's a market at the end of the day, even I know it's a market at the end of the day. I'm trusting you with your acumen. So I say, I'm giving it my best shot. I'm putting in the right kind of techniques which deserve this kind of market, which deserve this kind of an investment. But you need to give it time, and you need to be patient with a significant gestation period.
Okay.
So I could say anything between a 6 months to a 1 year gestation period, depending on what I'm able to read about the other person. And more often than not, there's also been a situation when people say, no, but some friend of mine told me that we put in money and in 2 months we got X amount of returns. So I'm very frank and honest about it, saying that I'm not denying that your friend could have done that. I don't do that.
Okay.
So it is for you to decide which way you would like to go. If it's with me, it will be a very conservative approach. But apart from conservative, the second C, which is more important, is it will be a consistent approach. So I may not give you 40% in year one, but I'm not in that bandwagon which will give you minus 18% in year two.
Okay.
And just tell you 40 minus 18 divided by 2 is great returns, you should be happy. So I might be in that boat which is giving you 17, 18, 19, 17, 18, 19, 17, 18, 19, sometime 22, sometime 19, sometime 25. I might be doing those kinds of things. At least historical data has suggested like that. I'm not saying that's the way it has to be. But given the last 10 to 15 years of actively managing people's monies, I've definitely come to realize, and I'm convinced that people like consistency. Eventually, however ruthless you are, however reckless you are, however you feel that you want quick money, or I want this, I want that, I want to invest, suddenly you want to invest, suddenly you want to trade. These are all mind things that keep happening inside. The real contest is when you put money on the table. At that point in time, you don't want to be reckless anymore. The same reckless you who was 15 minutes back suddenly becomes very orderly and very,
Responsible.
very responsible and disciplined, that, oh, you know what, at the end of the day, it's my money.
Hmm.
Then they will be like, oh, you know what, just do whatever you think is best. We just keep talking, someone said this, someone said that. So I'm
Yeah,
so
you're the
used to
expert.
having these kind of conversations. Another thing people, some blame and some laud, and you might do either, is that I just kind of temper down the entire mood of the room. So when there'll be like all boisterous chats and all that on, and I'll be like, okay, and this and that, and this is an investment, and we'll do this and we'll do that. So they're like, yeah, okay, but like, can you just tell us like how to and what to? And I'll be like, yeah, it'll happen, but it'll happen over a period of time. I don't have a magic wand. I don't have a printing machine of notes in my office. So it will have to be with time. You will only be able to judge me with time. So I might have been invited to your office because ABCD recommended me. That only allowed me an entry into your office. That was the only mileage I could get. The rest of the mileage now doesn't depend on ABCD. Now it depends on your equation with me.
Yes.
So I need to bring you down or take you up in terms of my wavelength to explain you what I do. And now that I've explained it, this is what I do. And this is how I do it. God Almighty's blessings, it's been working. I would think it should work with whatever I'm doing. The rest is really your call.
But now here you're using psychology.
No, how am
With
I using
people.
psychology?
You're trying to
telling
understand
people,
them.
no, I'm trying
emotions,
to only
feelings.
understand what are they thinking when they're talking to me, from where are they coming. So if you're coming to me with a thought process just because your friend told you she made money in 2 months, then I need to give you a reality check that that's not the way the markets work. Your neighbor after 5 weeks might tell you that I've lost 50% on my investment. So you will have all this kind of these things happening. Because pretty much everyone is involved in the markets in some format or the other. Whether it's direct equity or SIP or mutual fund, whatever. Everyone's involved. Everyone has their experiences to share. My thought is only that this is the way I look at this. This is what has worked for me. And I hope it works for you. And this is the way I kind of execute my trades.
And tell me about a time where it's not worked out and maybe like your client has gotten a little worried and come to you and been like, no, now what do I do? And then what has
happened last week. It's happened as early as last week. And that's more because markets have fallen for quite some time. And this particular gentleman family, they've been working with me for 4-5 years now. And they've always recorded positive returns.
Okay.
And this was a time when 2 or 3 of the stocks that were mentioned has fallen. And they kind of got frantic. And maybe that got added with some other mood at home. It could be just a bad day. But like I told you, Aleena, I don't judge people. I always give credit and benefit of doubt to that person who's speaking to me. So if you are rude to me or if you shout at me, I will not reciprocate in the same way. I will always say that there's something that's happened that has prompted her to talk to me like that. Is it me that has prompted her to talk to me like that? Maybe not. But there's something. She's carrying some baggage, there's some thought, there's some stress, there's some anxiety which has resulted in that. So I rather understand from where you're coming and then temper you down by explaining you. So they called up and said, you told us to do this, you told us to do that. I said, yes, I take full credit or discredit of the advice that I've given. But I had mentioned to you when we made this specific investment that it's a 2-year period that you need to hold this stock.
Okay.
I did not say in 2 months we need to exit. It has only been 2 months, and this full 2 months has seen the markets being either sideways or with a downward bias. That's the reason why we are where we are. Further comfort to you is that when I told you to do this, I have done it for myself also. So I'm in the same boat as you. But I'm not looking at it on a daily basis because I have given it a 2-year time frame. I will only look at this within the next 2 years. Maybe after a year and a half, when I've completed 50, 60, 70% of that time journey, to see that do I still feel the same way I felt about this when I entered this particular trade or when I made this investment. Thereafter, it was like, oh yeah, but we just thought we'll ask you because all my other portfolios are down. So there it was, that there was something else that triggered this, and that's why I received a call as well.
The entire market was down, so of course everything
Yeah, and
was
I
down.
had nothing to do with the rest of the portfolio. I was only responsible for this, which I had asked him to do.
Okay.
So like I told you, you can come with some baggage, but that baggage was not explained to me in the beginning of the conversation.
Or you would have pointed it out.
Yeah, but towards the end, it became clear that it's because other things are not doing well. Maybe he had a doctor's visit. Maybe things were not going well in the office. That whole thing also got added by saying that, oh, these two companies are down. Let me call Manish and say, what is this? He asked me to buy this, but it's gone down. But you need to just deal with it the way you have to deal with it. Like I said, these are all parts and parcels of life. These are phases. You have good days, you have not so good days. You live with them. As long as you're doing what you think you're doing is right, as long as you're on the path of righteousness, I would like to believe everything falls in place.
What kind of a person should never do index trading?
Somebody who's not very informed and doesn't understand the risks associated with it. Risks are associated with normal investments also. Risks are associated with SIPs also. Risks are associated with stocks also. In the case of index trading, what happens is that the markets have to be volatile, and you are really trading in a volatile market. You need to stomach that kind of risk that it involves. Is it a calculated risk? The answer is a yes in capital letters. It is a calculated risk. More often than not, people do not give it that credit of risk. They do not address that risk. They hear it. There's a lot of hearsay. There's a lot of television. There's a lot of WhatsApp alerts. There are a lot of messages that you get that, give us your money. We'll take it from 100 to 200. There will be success trades which will be posted. I'm still to see a company which posts negative trades and says, look, sorry, we could go wrong also. You only hear the good stories, you don't hear the not so good stories. So the way you approach it, there is a statistical analysis which has been done in our country, which they call the 90-90-90 rule, which talks about that 90% people lose 90% of their wealth in the first 90 days of their trading career.
Yes, I've heard of this.
But that is more to do with trading, and that is more to do with reckless trading. So it only shows us that that is the way 90% people are thinking. But there is another statistic which also shows that in the last, say, 24 odd months, 75% people who have traded in the market have lost money. What is interesting for me to understand is that 25% were the people who made the monies of the 75%.
Okay.
Which only means that there is a lot that one can do in this market, provided you approach it diligently. So instead of partaking of that negative news or that negative publicity, so to say, that, oh, people lose money in this market when they trade, therefore we should not, this is not meant for us. You rather hone your skills and take the first step to being patient and disciplined. Take training if you feel that this is meant for you. Understand the nuances of this science and go for it. It should be a matter of time that you should be in the basket of the 25% and not the 75%.
And what kind of habits or traits does a person need to become an index trader?
I think, so whether it's trading or index trading is still a part of trading. It is trading. It's just that it is typeset that it is only trading the index. But all of this that I've spoken about, I feel help me.
Hmm.
I can't speak on anybody else's behalf. There might be people who have skill sets different from mine, who have virtues different from mine, maybe the complete opposite of what I do, and are still very comfortable in doing what they're doing. But I feel things like being disciplined, being diligent, being very honest to what you do, not giving false commitments, not talking over the top, not bragging about your good trades, in fact, being more humble about trades that did not work out for you. I am very happy to discuss trades that did not work out for me. I am very happy to talk about the gentleman who called me when things were not working for him, when I had given him some advice. Simply because those keep you grounded, you are revisited, you're reconvincing yourself that this is a market. It will never go the way I think it has to go. I need to approach it with all humility. uh, One of the things my mentor taught me right in the beginning was that charts and graphs and techniques are all different. But first of all, always remember the market is supreme. He said that the day you are able to learn that, the day you are able to accept that, the risk will automatically get managed and the rewards will start flowing in. At that time, it seemed like a very esoteric term. It seemed like, yeah, okay, the market is supreme, the market is supreme. It's a sentence that you write. The market is supreme. But as you start gaining more experience and you start seeing the way markets are moving real time, you realize how true that line is, because you have got nobody to blame but yourself. You've got, like I always say, the pat and the slap both has to be mine. So when I have only myself to blame, and when I have only myself to feel happy about that, okay, this thing went well, so and so was happy, so and so was happy, I was happy, thank God everything has gone well. So it's a very internal experience. There are people who have trading houses where they have a lot of traders who work with them, they work as a large team. But eventually, if you go to every trader, no two traders are the same. So investing is where I can talk to you about a philosophy. I can tell you, in historical past, when I've seen this has happened, I have invested into real estate and it's done really well. Whenever markets are moving in this negative zone, I have invested in debt and it's done really well. Gold, silver has done really well. So those are philosophies backed by history. I can discuss a thought process with you because I have the time to do that. I have the liberty to do that. When I'm trading, it's a live market. My decision is not taken in post-mortem. If the market has gone up today, I can't rewind to yesterday and say, oh, I bought it yesterday, because I didn't buy it yesterday. When the signal came, I did not act. Today, I'm seeing the result of that signal and I'm not involved in that signal because I did not take action. So trading is very, very real time. It's live in front of you. The decision has to be made then. So what is your frame of mind at that point in time governs the way you're going to take the trade. I prefer keeping all the other emotions aside. We're human, they can come in. But I would like to believe that I've been able to keep them aside. And at that point in time, only put the skill sets into practice, which are not emotional, which are not market sentiment driven. There's no concept of I feel, I think,
Okay.
I believe. None of those concepts exist at that time.
Okay.
It's a clear switch on, switch off button. So your light is never half on, it's either off or it's on. It's a shade, there is no gray. It's black or it's white. Is this a buy or is this a sell? That's the only question you're trying to answer. You might use all your skill sets, all your techniques and say, this is neither a buy nor a sell. It's a no man's land. This is a zone I'm not going to do anything about, which is absolutely fine. But you have to come up with a decision. Because markets are not going to go from 100 to 120 and only for you go back to 100 so you can relive 100 to 120. That's all wishful thinking. That's all post-mortem. So for that reason, you just need to be there. When you speak about being in the moment, that is the pure definition of being in the moment. Because if you've lost that chance. That chance is not coming back. So these are more, I think they're life skills.
Yes.
Which are honed over a period of time. And everyone has their own ways of looking at it. This is my way. This is the way it has worked. This is the way I believe it will work. And we'll just see whatever life has to offer.
Manish, so much of what I do, for example, in our business is about like feelings and emotions and relating everything with I believe, I hope, and I want, and all of these. So it's very interesting that you work on the other spectrum.
But that is what your work demands.
Yes.
So it's about what is. So you need to be flexible. I always say, be like water. You put me in a glass, I'll take the glass shape. You put me in a plate, I'll take the plate shape.
No, but sometimes I think that would it be better if I went more on like data analytics and I kept my feelings aside, but then because certain things require it, maybe.
But what in your field requires data analytics?
Maybe like running the business, looking at the numbers, looking at like what would grow if I did like this. But then I personally, which other people may not agree to, I go more on like intuition because I'm good at it and it naturally comes to me that I can.
But like I said, that is what your work demands. You're a people's person.
Yes. And that requires
exactly. So that requires your thinking. So for you, analysis is more of the person you're speaking to.
Yes.
Your analysis is not numbers.
Yes.
In my case, I can't be like, the person who spoke on television seemed to be in a good mood. Because of that good mood, the market is going to go up. So thankfully, I'm not in that because I don't have a television set. So for me, it's all about exactly what it is in front of me. So my creativity, thankfully, is not very good. And because of that reason, it is 100% analytical with no place for gut, no place for emotions, no place for I feel, I think, I believe.
Got it. And like you said about the markets, that's above everything else. Like that, we have a similar thing wherein we say that our audiences are everything.
Exactly.
Everything you're creating is for the audience. You can't be complacent and be like, I will do what I want. I have to also cater to this audience. I have to think of them first. I have to think that they are watching and they are going to give back everything that I need to make this work.
In a way, you have agreed that the way we say market is supreme, you're saying the audience is supreme. So like I said, these are in all walks of life. In everything. But the thing is, we don't have the time to sit and devote to this kind of thinking.
Yes.
Which is required. Okay. Which is required. So I like to do that. I do that as much as possible. I am a loner in my own ways.
You do a lot of reflection.
Immense.
And how does that help you?
For me, where it helps me is I'm fixated on trying to be righteous all the time.
Okay.
Is that possible? The answer is no. Because if I was, I wouldn't be human and I wouldn't be here. Am I doing it to the best of my ability or no? Is what I reflect on. I can have an aspiration. I could have a goal point that I want to be as righteous as possible. But will I never do the wrong is not possible. My reflection only helps me to sleep comfortably, to sleep peacefully, thinking that I did whatever I could do to the best of my abilities today.
Okay.
Whether that was as a father, or was that as a trader, or was that as a husband, or was it as a friend. So if somebody needed to speak to me, was I able to give time and listen? If the person asked me something, was I able to think only of his problem and give my feedback or give advice? For me, even those small things matter. So when I sleep, I must sleep saying, I could not have done anything else today. Okay. I did exactly what I could. And that could border on sitting and watching Netflix with my wife. And at that time, my phone will be on silent. And there will be no ringtone and no messages, nothing, because at that time, that's the quality time that we are spending with each other while I'm watching a series. Sometimes we're not watching a series and both of us are sitting and reading a book on our Kindles.
Okay.
And she's reading her book and I'm reading my book, and that is the me time we have, even though we didn't speak. And then after 15-20 minutes, it'll be like, so how's your book? And how's your book? And what
Hmm.
happened in your book? What are you reading about?
Hmm.
So for me, all these things have to come in compartments.
But tell me, that doesn't that put a lot of pressure if you are analyzing it so much, which is not the markets, which is real life, that this has to be this much, I should be available, and life doesn't always go according to how we plan. When it doesn't, does that put a lot of pressure on you?
Zero. Because I told you I'm aspirational.
Okay.
I'm not saying it will happen.
Hmm.
I'm not putting all my expectations on the end goal. Exactly like the way I can project a trade, I cannot be, I cannot bring that outcome to me. I cannot record, I cannot fast forward and make that trade a profit. I cannot
Correct.
rewind and make a loss a profit.
Correct.
So, in the same way, I am projecting, I am doing my best, I am aspiring to achieve a goal. Whether I achieve it or I don't achieve it is fine. At least I tried.
Hmm.
So there could be a lot of mix and match that happens in your day.
Yes.
You could have a very heavy day. Because of that, when you're going to play squash, you may not be playing your best.
Hmm.
But in my case, I will leave that day in the squash bag when I'm taking out my squash racket, saying that that compartment was my office compartment.
Hmm.
Now, for the next 30 minutes, I'm playing squash.
Hmm.
Let me enjoy my time playing squash.
Hmm.
So, and while I'm playing squash, I'm not thinking about what happened in the office that day.
Okay.
And when I will finish squash and come back home and I'm sitting with my kid and playing, then that becomes important.
Hmm.
Then I'm not thinking that how did I lose that point in squash?
Hmm.
Maybe there was something wrong with my technique.
Hmm.
Maybe I should ask my coach to give me one more lesson on how I should serve better.
Hmm.
So for me, it's all compartments.
I really like that. I'm going to take it to my life because I have a lot of things flowing over each other because our life is so, and socials is such, and you're constantly like checking and like doing things. So then it's very difficult. As much as I try to be in the moment, life spills over, right? Like, for example, you meet somebody outside that talking to you about the podcast, then you're thinking about the podcast, or when you're with your family, something will happen about some other bucket in life, and they all keep spilling all over each other.
So, Aleena, it's in our hands. I would
It's
like to believe.
okay.
I would like to believe. I'm not saying outcomes are in our hands. How we manage our thoughts. So many times people say, but if I'm stressed, what can I do?
Yes.
If I'm stressed, I'm stressed. What can I do? I don't think that's the answer. I don't think we are so helpless that we cannot help it.
Now tell
We
me one
can.
thing. When people say, for example, if somebody is stressed and the solution that somebody will come up with be, Arey, don't be stressed. Arey, don't take tension. Arey, don't worry. But nobody tells you actually how not to stress.
I'm not saying if you're stressed, this is my prescription, please do A, B, C, D. If I tell you, oh, swimming does a great job, oh, meditation does a great job, listening to music does a great job. But if you do either of these three and you're still thinking, those haven't done their job.
Okay.
You could be swimming with a mindset that I'm entering the pool because it's going to calm me down. But while you're swimming, you're still thinking about the problem and you're still stressing. So it clearly answers that the solution is you.
Okay.
The solution to the problem is you. So I'm not saying external forces, I'm talking about internal forces. The choice of worrying or not worrying is you. And it is definitely in your hands. And in my X number of years of being in this world, I'm convinced that it is in your hands.
It's in our minds.
It's in your mind. It's about controlling your mind. I've always said it needs to be harnessed.
Okay.
But the reins are in your hands.
Hmm.
So just because you use the word London and your mind can quickly go to London and you can imagine London, in the same way, why don't you just imagine peace? It is in your hands. Having said that, that's just an example that I'm giving, but the thought process really is slightly more spiritual, slightly more philosophical. That if you know you cannot gain anything from doing this, why are you doing it?
Okay.
If worrying genuinely was a cure, I'm very happy to sit and cry over here. If it was the cure, If you felt, oh, you know what, but when I got so stressed last time, 15 minutes, my work was done. If that is the cure, absolutely fine. We must.
But it's not
Because our
difficult.
outcome is happening.
Huh.
Whether it's happening by laughing or it is happening by crying, it's happening. So either ways, we want that outcome. Let it happen. Let's cry. You cry, I laugh, someone stresses, someone's anxious, we'll reach there. But if we are definite, we have got proof, we've got track record, we've got enough of examples to prove that it never helped us. It never helped us. So let's be happy. Let's be calm. Let's be hopeful. Let's realize that we are not the doers. Let's realize everything is not in our hands. Our karmic action is in our hands. Our actions, what we do physically, what we speak, that's in our hands. The doer is someone else. The creator is looking after his creation. So let's leave the results to him. Because we are 100% sure we cannot bring the outcome. Results is not in our hands. And the first step to issues happen when we consider the result is in our hands. Because then you're brooding on the lines of expectations, then you're brooding on the lines of this has to happen. And if I want it, I'm so determined that this has to happen. This new word floating around in the universe called manifestations. Manifestations is about action also.
Yes.
But nowhere is it said that everything will be done by you. We do say, right, the universe listens to you. So let the universe listen to you. Whoever is sitting and controlling the universe, I am convinced he knows what is best for us. And he will do what is best for us. And if we move in life with that hope and trust, the best will happen. You may not realize that what is happening to you today is the best because it's not in your hands. But eventually, when you'll go back in time, you'll say, actually, what I wanted was not the right thing for me.
True.
But what happened was actually the right thing for me. So when we talk about coincidentally, this happened. Ironically, so-and-so came in my life and then suddenly I started podcasting. All of us have stories. I don't consider any of them to be ironies. None of them are coincidences. They happened. It was the Creator's grace. He showered his blessings on us. At the right time, the right thing happened. At the right time, you were put in the right place to do the right thing. And then the right thing happened. So I've always believed in keeping it simple. And keeping it simple to the extent that in the markets, you have a lot of things one can do. I just stuck to this index trading, stuck to Nifty, did only this one thing. I'm not saying other portfolios and other assets can't do better than mine. There could be things which I've done much better. I'm just happy and content with what I do.
This has come over the years, like a long period of time.
Certainly.
Right? Tell me about but a time or a situation where it was really, really bad and you learned how to accept it and be okay with whatever the outcome is.
In all fairness, without any gloat, I've never had that situation. I've never had a situation that I've lost hope.
Okay.
And I felt that everything is crumbling and I need a miracle to get back on my feet. I've never had those moments, which again, I will not give that credit to myself. I'll give it to the Lord, where I've always been a believer in Him. And I've always considered that whatever He knows and whatever He does is the best for me. And if I already have someone superior to me looking after me, I really don't need to look after myself. I'm looked after. So one is that you need to ask somebody to look after you. One is you're confident that I'm looked after. It's like saying that I know I have an insurance policy. If something happens, my family will get the money. In the same way, you're there in this world, you're not there in this world. What will happen before me? What happened before me? What will happen after me? I don't get into any of these thoughts. I don't indulge in this thinking simply because if you don't have an answer, you don't have a way of getting an answer. Whatever is only talk. I can ask you, what do you think about afterlife? Necessarily, you and me haven't seen it. We have our own imagination about it. So what cannot be affected with our conversation, there's no point doing it. What can be, we should spend time on that. And if you're able to do that, 24 hours is more than sufficient time to execute everything that we want to.
Okay.
I was sitting and watching a movie, therefore I slept at 4 o'clock in the morning. That choice was yours.
Hmm.
Waking up at 8 o'clock because you have to come over here and you wake up with a headache and you have to pop a painkiller and come over here, that choice is yours.
Hmm.
But just the previous day, if you would have been slightly more diligent, that because my podcast is so important to me, because I want to give it my 100%, I want to be fresh, I want to laugh, I want to have a good time. Maybe you're so good at it that even if you came after 4 hours of sleep, you are good, but you know you're not your best
Hmm.
because there's something which is not good. You're not fresh, you're tired, you might have a body ache, you might have all of that. You might be smiling and laughing and talking, but you're not comfortable. But if you knew that that is what you want to achieve tomorrow, which is in your hand, you wouldn't have watched the film.
Hmm.
You would have said, yes, people have told me it's a great film, I'll keep it for the weekend.
Hmm.
I'll do it when I know the next day is a later start. I'll do it on a Saturday when I know I can wake up late on a Sunday. So these are the very small choices which we can make.
Hmm.
We like to complicate life.
Hmm.
We are responsible for complicating life. Life is very simple.
Hmm.
It's like as simple as having 5 white t-shirts to wear to the office,
Which is what you do.
which is what I do.
Hmm.
Because it doesn't take me more than 5 seconds. The 5 seconds is only to
decide.
cover to take it out and remove my t-shirt.
Hmm.
And many a times, my wife Neha tells me, "You do realize, right, that people in the office can tell you that you were wearing this yesterday." And I'm like, "Good luck to them if they think like that." Now I should start bothering of what somebody else is thinking. Is like only wasting more time.
Hmm.
I've worn a t-shirt, it's plain white, it's nice, it looks okay. I'm comfortable. I'm ready to go to the office. I'm going for a greater purpose, which is to sit and do my work. I did my work and I came back, and that's fine.
Hmm. Manish, if I had to remove trading from your life, who would you say you are?
I'm a human being, and I would like to realize every day that I'm human.
What does being human mean?
Somebody who's full of flaws, somebody who's not perfect, somebody who's the creation of the creator, and therefore must submit and surrender at every given time to the creator, should not forget that there is a greater power, there is a larger power, call it supreme energy, call it God, call it whatever you want to, and to be able to instill values which you can leave for the next generations. For me, what I am doing, I am doing. Kids will do what they have to do. You can be a guiding force, you can be giving advice if you're asked for it. You can tell them, in my experience, these things were not good, these things were good. I suggest you do this, I suggest you do that. But what is most important for me is to instill values in them with a thought process that your primary focus should be to live on the path of righteousness. That has to be the aim of any human being. The rest of it is just a story tale. It will come, it will go, things will happen, all of that will happen. But eventually, when you leave this world, you should be remembered for the values that you had.
Okay.
And ego and supercilious nature, being pompous, has never helped anybody. The biggest of the emperors had it. They left this world without carrying anything.
Hmm.
That should be living examples, those should be historical examples we should learn from. That we will be in that boat too.
Hmm.
We will be in that situation too. Reminds me, in the same thought process of my philosophy, it reminds me a story of Akbar and Birbal.
Hmm.
Even though it might be fictional, but it's a story to take some learnings from. When Akbar used to consider Birbal to be very intelligent,
Hmm.
but he always used to have this comical rule with him where he wanted to test him to see that will he still be in a position to reply to my questions.
Hmm.
Birbal on the other side always had that I can answer any question.
Hmm.
And Akbar once asked him that I want you to give me a line where when somebody is very happy
Hmm.
and boisterous
Hmm.
and feels that he's invincible and he reads that line, he feels sad and he feels quiet and he feels sorrowful. But that same line, when someone is sorrowful and quiet and in solitude and reads that, he suddenly feels happy and boisterous.
Okay.
So I want you to give me those words. So the story proceeds a little bit where he gave that challenge to everybody in the court, and all the courtiers and kings and pundits and brahmins and everybody, spiritual leaders, they all came with different ideas, but nothing answered that question of his.
Hmm.
And like the foretale goes, Birbal used to always step in last. And he tells Akbar, I have an answer for this. He's saying, what is that answer? He's saying, I would like to write it on a piece of paper and give it to you. And he did that and he gave it to him. And the words read, this too shall pass. When you read that, you're supposed to, you are obligated to resonate with that. You should, and you are obligated to. The reason why I repeat that word obligation is because these are the things that will make you grounded. These are the things that will convince you that you are not invincible, which is the same thought process I use in the market, that I am a nobody, the market is supreme. In the world, in my living days, I am a nobody, the creator is supreme. And there is a line by Rabindranath Tagore where he says, life is the drums of destiny, which my guru had taught me. And he says, when life is the drums of destiny, every part of the drum, when you hit, gives you a different kind of sound. So life is that drum. You might be playing it, but every time you hit, there's a different sound, which are different phases of your life, what destiny has planned for you. But if you're able to play all of them, it creates harmony, it creates music. And the other person likes to listen to all of that, even though the tones were all different. So that is how it is.
I actually really like the name of your company, Deen Dayal Investments. What does it mean and where did it come from?
So everyone who asks me this thinks that it's some senior member's name, some great grandfather's name. So in the Guru Granth Sahib, the word Deen means somebody who needs help, who needs support. More clearly, somebody who's poor. I consider we humans are in that description.
Okay.
That's my consideration. So we are the Deen. We are the people who need the support. We are the people who are poor. We are the people who are always asking. We are the people who are always begging. We are the people who are always praying for mercies, for help, for blessings, for miracles, for everything. Dayal is the term which has been given to God, whether it is in this case Guru Nanak or it is anybody, any saint, any mystic, any form of God. So this is a relationship or a partnership between me being the human, who's the Deen, and him being Dayal, who's the Lord, who's going to shower the mercies on the Deen. So that is why it is Deen Dayal Investments.
Oh, very interesting.
I consider this more like a Venn diagram, which we learned in school, where you have a human life, you have human values, and then you have the spiritual side of things. And then this is more a merge of both of them. And that is what leads to tranquility and a perfect life.
Wow. The biggest takeaway that I have had personally from this is that I feel like for a long, successful career, especially one that demands a lot of risk taking appetite and a lot of like resilience, is that you need to be mentally very, very strong. And that's what I'm gaining from the conversation. And that's why I kept asking you for the tips on how to do it, because, I want to be able to reach there, especially for me when it's a little bit more public. And that needs also a lot of mental resilience. And so I think that's been my biggest takeaway from this podcast. And I think you've given us a lot of insights and a lot of like mindset operating like things on how to do life. So that's really valuable for me. And I'm sure it's going to be for our audiences also.
Thank you for your kind words. From my side, I'm honored and privileged to be on your show.
I hope that you enjoyed and you had
I thoroughly loved it. It was a great conversation. So thank you for that.
Thank you so much for being on the show. Thank you guys so much for watching another episode. If you enjoyed, please let us know in the comments below. Don't forget to subscribe. I'll see you in the next one.